people born on the same day, same year, same planet, same species. One of them will spend their life worrying about rent. The other will spend their life worrying about where to park their yacht. That difference isn't talent. It isn't hard work. And it definitely isn't luck alone. It's design. Right now, the world economy is quietly deciding who gets rich and who doesn't. Not with a vote, not with a conspiracy, but with rules so old, so technical, and so boring looking that most people never notice them working. And that's exactly why they work so well. Here's the uncomfortable part. If you line up the richest countries and the poorest countries on Earth, the order barely changes. Decade after decade, crisis after crisis, empires fall, technologies change, but the money keeps flowing in the same directions. That's not an accident. Let's start with something simple. Money doesn't appear. It's created, and almost all of it is created as debt. When a government spends or a bank lends, new money is born, and every new dollar, euro, or rupee arrives with a timer attached, interest. That means the system doesn't just need growth, it needs constant growth, forever. No growth means defaults. Defaults mean panic. Panic means crashes. So the global economy is built like a bicycle. If it stops moving, it falls over. Now, here's where things get interesting. Not all countries ride the same bicycle. Some countries issue money the world depends on. The US dollar, the euro, a few others. When these countries borrow, they're borrowing in their own currency, a currency they can create. That's like writing yourself a check. Other countries don't get that luxury. They borrow in foreign currencies, dollars, euros, yen. If their economy slows down, they can't print what they owe. They have to earn it or beg for it. And that one difference changes everything. In 1980, the US owed about $900 billion. Today, it owes more than $30 trillion. And yet, investors still line up to lend it more. Not because it's responsible, but because it controls the world's main financial oxygen tank, the dollar. If global trade runs on your currency, you don't play the game, you write the rules. Now zoom out. Picture the global economy as a giant funnel. At the bottom are billions of workers, consumers, small businesses. Their labor, their time, their savings flow upward through companies, banks, and markets. And at the top of the funnel are assets, stocks, real estate, bonds, companies, land. Here's the quiet trick. If you already own assets, the system is designed to push more money towards you. Why? Because when central banks panic, and they always do, they don't send money to people, they send it to markets. In 2008, trillions were created. In 2020, even more. Not to raise wages, not to lower prices, but to stabilize asset prices, which is a polite way of saying protect the owners. So if you owned stocks, houses, or companies, you got richer. If you owned your labor, you got inflation. That's not a theory. That's what the numbers show. Over the last 40 years, productivity kept rising. Profits kept rising. Stock markets exploded upward. Wages mostly didn't. The system didn't break. It did exactly what it was built to do. And here's the part nobody likes to say out loud. Once you're ahead in the system, it actively works to keep you there. Rich countries borrow cheaply. Poor countries borrow expensively. Rich companies get bailouts. Small ones get told to be more efficient. Big investors get access. Everyone else gets apps. Even risk works differently depending on who you are. If you're small and you fail, you're irresponsible. If you're big and you fail, you're systemic, which is a very expensive word for too important to lose. So who actually gets rich? Not the smartest, not the hardest working, the ones closest to the money printer, the ones who own what the system is designed to protect. This is where the story usually gets dramatic. Villains, plots, secret rooms. But the truth is more unsettling. No one is really in control. The system runs on incentives. Politicians want growth. Markets want stability. Voters want cheap prices. Investors want rising assets. So we keep building more debt, more leverage, more promises pulled from the future. And every time it wobbles, we patch it. Print, lower rates, kick the problem forward. It works until it doesn't. Because the real question isn't who gets rich. It's how long a system can survive when it rewards owning more than doing and promises more than it can actually deliver.